viewer queries. We have Kunal Bothra as well as A.K. Prabhakar with us, and let's kickstart the query segment with this one. Is written by Shiva, and he's saying that he's holding IndusInd Bank 100 shares, which he's purchased at 1,400 rupees per share. He bought it before the COVID-19 led crash that we saw in March 2020. So he wants to know whether he should stay put with IndusInd or look to shift to some other bank for the longer term. Mr. Prabhakar, what's your take on IndusInd Bank? Looks like the prospects are changing for IndusInd Bank. We've seen the stock at least perform well over the past few months, but for the longer term, it makes sense for Shiva to stay put with this holding?
Yeah, I think so. It is one of the top 5 banks which we like, and no, the problem has been Vodafone Idea asset quality, but with the government package coming, I think IndusInd is a major beneficiary of that. And the stress in the system is also slightly loosening up. Now the IndusInd Bank has now exposure towards MSME and microfinance, so that is where this bank has not performed. Now I think as the economy is starting to pick up and almost we are nearing 80 crores of vaccination, I think banking stocks will perform. The top 5 banks, private banks, I think IndusInd Bank is also one which will start to perform from here on.
Understood. Okay, we've got a question coming in from Satyan from Palakkad in Kerala, and he's holding Hindustan Zinc 60 shares at a level of 340. He's asking if he can add more, and he says that his time horizon is 2 years. Kunal, I'm coming to you on this one. What do you say?
Just to definitely add the Hindustan Zinc, I think it's been a very strong stock in the last 3 to 4 months, where the metal index or the commodity index has taken a bit of a chop and churn, I would say. In between, Hindustan Zinc has managed to stand tall. The recovery has been quite stellar from the March 2020 lows, almost a 3x return for the stock from those 120 lows in March 2020. So I think in that sense, it's a good stock, and I would definitely suggest a hold for the stock, and use these 10% corrections, 15% corrections which come along the way as good buying opportunity or buy on dips.
All right, this next query is coming from Kaustubh, and he wants a technical view on Equitas Holdings for the longer term perspective. Kunal, how does Equitas Holding look on the chart if Kaustubh actually wants to invest in at current levels, or if he's already invested in Equitas Holding, does it make sense for him to stay put with it? Is it a sound company on the charts to be in?
Well, purely on the charts, I believe that yes, it makes good sense to hold on to Equitas. Now, I think the rationale for that is the breakout which had happened for Equitas in the month of July, just about a couple of months back. That was a big breakout for Equitas from 90 levels or 85 levels. The stock had jumped up to almost 120, 125 in a matter of 3 or 4 trading sessions. Now, post that, the stock has gone through a consolidation. So it spent a lot of time, moving into a new range after that breakout of, the 3-digit mark for itself, which means that the stock is going into more of a mature phase. Now, whenever you see such kind of price action, where you see a breakout followed by, which is on the chunk of very strong volumes, followed by a consolidation where the stock spends a lot of time and goes through a mean reversion process, that is considered to be a very healthy and an encouraging signal on the chart. So I would, suggest to hold on to Equitas. If you've purchased at lower levels, then I believe that you have stand a lot of buffer in terms of cushion as well. And if you're looking to buy at current levels, then I believe you should look to average it out further as well.
Okay, we've got Vimala George who's asking whether it's a good idea to sell DCB Bank and RBL Bank and shift to Federal Bank at the current levels. Kunal, this is specifically for you. I believe that it's not a very long-term idea. It's a trading idea. Is this something that makes sense to you?
I would suggest why not look at maybe shifting towards an ICICI Bank or maybe an Kotak Bank, because I think it could make a much more prudent and better sense. Because what's happening is that the likes of DCB Bank and RBL Bank, as it is, these stocks have shown a lot of weakness in the last so many months. But when you try and look at shifting towards stock from which have been inherently weaker in terms of price trends, you have to go back to a stock which is in the thick of momentum. If it's purely a short-term trading play, you can't bank on to another weaker stock, expecting in that weaker stock or an underperforming stock would try and resell it and give you a chance of an underperformance which could be covered up. So I think Federal Bank is a stock which falls into that category purely from a short-term basis. So which is why I would suggest that why not shift to an ICICI Bank or a Kotak Bank, which both of these stocks are into a thick of momentum. Or you can even look at IndusInd Bank. That stock had given a big breakout last week. It's consolidating. So I think you should try and take opportunity of these names. So I would suggest that if you are looking at it from a specific short-term query, shift out to any of these three banks.
All right, this one is coming in from Ravi from Bangalore, and he's asking, is it good time to move from Lupin to Divi's Laboratories? He had purchased a Lupin at 878 was his buy price. So, and he's looking at the longer term. So, Mr. Prabhakar, what's your take on this query from Ravi? He's asking whether he should shift from Lupin to Divi's Lab. Do you think that shift right now makes sense?
I think so. No, Lupin has been an underperformer and they have few problems. So I think even Divi's Lab or Dr. Reddy or Gland Pharma would be a better alternative. But Divi's Lab is a company where their growth and their ROE has been very stable. So it is a very good choice to shift to Divi's Lab.
Okay, we've got Marion who's bought 100 shares of LIC Housing Finance at 221, asking what the technical indicators are suggesting. The time horizon that Marion has identified is the next 3 months. What would you say, Kunal? How do the charts look?
I think if he's bought at 221, it's been a phenomenal entry point for the viewer. The stock is almost at 415 or 420, if I'm not wrong, and I think it's looking very strong. It's been one of the few, I would say very sluggish and slow kind of a mover in terms of price trends. But whenever you've seen the stock picking up price action, it's gone into a very strong uptrend, which has lasted for, in historical aspects, which have lasted for years on a trot for LIC Housing. So the stock is going through such a similar kind of a trend breakout. I would suggest that if you bought at such lower levels, you should definitely look to hold on. The nearest breakout point now for LIC Housing on the charts, and this could be more of a medium-term breakout, would be closer to 485 or 475 mark on the spot level. So whenever the stock breaks out of this 475, 485 band, I would sense that this could be a big breakout for LIC Housing, where the stock can probably even try and cross the all-time high levels as well. So if you bought at lower levels, I would definitely suggest a hold.
This one is coming from Rajesh, and he wants to know about Jufic Bio, which he bought 100 shares at 125 rupees per share. He wants to know whether he should continue to hold on to this counter or he should go ahead and sell, and if sell, then which other stock can he look at? Kunal, do you track this one, Jufic Bio? I'm not sure if I'm pronouncing it right, but about 100 shares of 125 is what Rajesh has purchased it at.
Not really. I don't track the stock, Cheryl, but just giving a broad answer. One of the charts which I explained just very recently on the Chartbusters, that the small cap index is going through a big resistance point, something which was seen in the year 2008 as well as 2018. So purely on that sense, I think it makes prudent sense to try and shift from small caps to getting into the large cap names. I think this could be an apt time where you should look to try and churn your portfolio and look at getting the skew and bent more towards the large cap names. So purely on that aspect, I would suggest that you should make that switch and shift to some other large cap name. Why not look at banking stocks even at current levels? I think they're looking very attractive to me on the longer term charts.
Okay, speaking of banking stocks, Harsh Ranjan is asking about Bandhan Bank, and he's asking on the fundamentals. Mr. Prabhakar, what would you say about the next 5 years? And he's specifically asking about the management, about Chandrasekhar Ghosh. What do you think about that?
See, we need to understand, this is microfinance converted into a bank, and their presence is in West Bengal and Assam, where you had the election recently. So that is something which is impacting the thing. And COVID has also impacted their asset quality. But when it comes to growth, they are growing faster than any other bank. In the top 5 bank, HDFC grows at 20%. This bank is growing at 30%. So the growth is there. but we need to understand, the asset quality is a worry. That is why the stock is not performing. But the underperformance will be there for 1-2 years till they stabilize. Post which I think there will be a rally. So if you have a 5-year view, then Bandhan Bank is okay. But being with the leader like now HDFC Bank or ICICI Bank, the risk is always mitigated. So that is one thing. Now management wise, I think everything is fine as of now. But we don't have a coverage on the stock, so we have not done a deep study into this bank.
Okay, this one is coming in from Satish from Bangalore, saying that, asking whether it's a good time to invest in clean science at current levels. Mr. Prabhakar, Clean Science, do you track it? Very recently listed company, but if somebody wants to list, actually buy it at current market price, fundamentally makes sense?
I think so. No, they are into research, and the company performance, after correcting, it has done very well in the last few days or few weeks. Now we are positive on this stock, and I think for a long-term investor, it is a good idea to slowly accumulate and buy in tranches, not in one single go, because you need to understand when a new company is listed, the understanding is also very limited. We need to listen to the management. At least 2-3 con calls we need to listen, and what is their guidance, what is that really happening in the company and their research. We need to understand. You need to give time. So like a monthly SIP or a quarterly SIP, if you are going to do it, it is one of the best stocks to buy at current levels.
Okay, we've got, I'm sure this is not Kunal Kaushik, but anyway, we've got a question from Kunal Kaushik on YouTube. A question is on HDFC Bank and HDFC Life, Kunal. When do these stocks start picking up steam? When do they join the rally is his question.
To say that when these stocks would start to participate, but you have to be very, very patient when you're looking at large cap names and quality stocks. They don't move into every kind of a market phase. These stocks, they have their own set of news flows and events which is surrounding them. But on a longer term basis, or on a medium term plus kind of basis, these stocks, they tend to do phenomenally well. HDFC Bank, for example, when you look at it comparatively, the stock in last 1 month has recovered from 1400 to 1570, 1575, even on the back of the negative news flow which had been surrounding HDFC Bank. So purely on that aspect, I would suggest that this move should continue for HDFC Bank. It should be just a matter of time. Now it's very difficult to anticipate when the breakout would happen, but for someone who's patient enough and looking to buy these quality stocks, I think it's a phenomenal entry point for both these names, HDFC Bank and HDFC Life. So I believe you should not fret about when the breakout would happen, but I think it's just a matter of time or maybe around the corner.
Okay, this query is coming in from Naveen from Denmark, and apologies Naveen that we've not been able to take your query earlier, but here it is. Naveen's query is that for the last 3 years he's been holding on to Edelweiss Financial 6,000 shares which he purchased at 87 rupees per share. He wants to know what's the outlook for this particular company for the next 1 year. Does it make sense for him to hold on to it? What's your take, Kunal? For 3 years, Naveen has been holding on to Edelweiss 6,000 shares which he's purchased at 87 rupees per share. On the charts, does it make sense for him to continue to hold on to it?
So there are two aspects to it. That one is the entire financial services index. It looks like the Fin Nifty or the financial services index is going through a comeback mode. So purely on that aspect, I believe that there should be more, many of these stocks which can join a breakout or a trending mode over the near future, and that could be over the next 6 months to 12 months plus, where you can see many of these stocks which have been languishing could try and participate up higher. Edelweiss, on the other hand, I think has given a cup and handle breakout. I think 2 months back, the stock had hit that level of 100 plus, and post that you've seen a correction coming by. Look at it this way, that even on the month when the stock had crossed that 100 mark, and the kind of candlestick pattern which you've seen for Edelweiss, it's not been able to penetrate even the 50% of that candlestick breakouts, which means that the buyers are still intact and expecting that the stock would probably consolidate and try and take support at this 80 odd mark. I would suggest that if you bought at 87 levels, you should definitely look to hold on and look at averaging if the stock comes towards 77 levels.
Okay, the next counter, Kunal, is also something that you need to look at. Cemech Limited is the counter, SEAMEC Limited. It's currently trading at 1,167 or thereabouts. And Sagar's got a question on the technicals. He bought at levels of 520 and he bought as many as 750. He's pointing out that the stock has gone up like a rocket. But he's wondering if the potential for the stock at this point is worth it to add more at this point. Should you hold or should you exit at this juncture?
Definitely look to hold on to it. Yes, the last 3 months have been spectacular for Cemech. So I think in that sense, from 520, which was, I think, if I'm not wrong, the breakout point for Cemech, it's moved up towards 1150, 1170, where it's currently trading. So it's been a phenomenal breakout for Cemech in that sense. But when you look at it over the span of the last 20 years, the last 2 decades for the stock, it went through a patch of rounding bottom. The breakout of rounding bottom pattern happened for Cemech at the 300 mark. And typically we've seen that whenever rounding pattern breakouts happen, they have a multi-year cascading effect into stock prices, where there have been many evidences that stock prices have gone up to almost 5x, 10x, 15x as well. From those rounding bottom pattern breakouts. So purely on that sense, I would suggest that there should be more upside for Cemech. Yes, the last 3 months the move has been phenomenal. So maybe some sort of a short-term profit booking could be in line. But the breakout which I'm talking of is almost like a 2-decade breakout. And I think purely on that sense, there should be at least another 3 to 5 years of upside for Cemech.
This one is from Nitin Gupta from Delhi. He's saying he has 50 shares of AU Small Finance Bank, which he's purchased at 1,159 rupees per share. He's saying his time horizon is 10 years. Mr. Prabhakar, makes sense to stay put for that long, or do you think that the company is that sound that it makes sense for one to remain invested in? Remember, we all know that earlier this month what happened to AU Small Finance Bank. It was pretty jittery, but over the longer term, makes sense for Nitin to stay put with this holding?
Yeah, I think financials in a long term will do good, but there were few resignations which has impacted this company. So that corporate governance issue we need to have into account. But I think all these will be taken care. If new manager, the changes happen in a good way. I don't think for a long-term investor one should worry. But we need to always have a tab on what events are happening in the company. Very important. So I think for a 10-year person, financials are likely to do very well.
Okay, we've got Soumitra who's asking about Sequent Scientific, and he's asking about whether it can be bought at current prices. How does it look on the charts, Kunal?
I think it's a better price to try and enter Sequent Scientific, because the stock which was at 330 levels just about in the month of July has come back towards 220. So there has been a sizable correction for Sequent Scientific from those levels of 330 to 220, almost a 30% plus correction in the stock. So purely on that sense, I think it should be a good entry point for you to buy Sequent.
Okay, this one is from Mr. Balan and saying that we've not been able to take his query of late. I'm very sorry, Mr. Balan, for that, and we're taking your queries today. He's saying that he has a lot of stocks in the small cap and mid cap as well as the metal sector, and he's seen a lot of them actually see a sharp correction. So he has Bombay Dime, Finolex, Tata BSL, Tata Steel, Jindal Steel. So he doesn't know what to do with his holding. Should he sell it, shift to large cap, or just sit on cash? This is what he wants to know. And I think, Kunal, this is a fear in a lot of people's mind, right? When you see some sort of a correction, you start panicking and you wonder whether should you go ahead and sell your holdings, sit on cash, what should you do? So what should Mr. Balan do? Does it make sense? Like, he has holdings in Tata Steel, Jindal Steel and Power, Tata BSL. So does it make sense for him to just go ahead and sell these counters, or make sense to just ride the storm for now?
Well, I think it's an interesting question, Cheryl. So I for one believe that the metal rally has just about begun. I think there should be at least another couple of years of very strong and fierce price uptrends for many of these metal names. So I think in that sense, purely I would suggest that if you've bought at even if you bought at higher levels, you should use that classical opportunities of corrections as good averaging opportunities for these stocks. But remember that you can't have a same averaging strategy for large cap names like Tata Steel and then try and compare them with the high beta stocks like Jindal Steel or Vedanta or such other names. You have to have two different pronged strategies for these stocks. For example, large cap names like Tata Steel, I think a 10 to 15% correction from the highs could be a good sizable entry point, or an averaging opportunity depending on your cost price. As well as for the mid cap names or the high beta pockets, you need to wait for at least a 25% correction from the previous highs as a good as a sizable entry point or an averaging opportunity. So I would suggest that it's a very strong case that these metal stocks could be in for a much more multi-year uptrend from current levels as well. So rather than looking at it as a short-term play, I would suggest that use dips as good averaging opportunities.
I want to actually talk about this a little bit more. I mean, just in trade today, you have the likes of Tata Steel that's down about 5%, Hindalco about 3.4%, JSW Steel down over 2%. We've got a question from Padma on YouTube about the stocks that she's holding. Padma is holding the likes of Tata Steel, Vedanta, JSW, Nalco as well. And overall, Mr. Prabhakar, she's making a profit about 10% or so on this metal portfolio. Should she hold on though? What should the strategy be? I know what Kunal is saying on the technical suggests that there is a multi-year uptrend, but on the fundamentals, do you think that it's a hold for you?
Yeah, I think so. No, we need to understand, the steel space. There is a lot of consolidation which has taken place. There are very limited player. No, except for China, no other country has expanded, and now 60% of the production belongs to China. 5.9% is what India produces in steel. So and now China's steel production has come down. So maybe the data, whenever it is released, we will see a major difference. But India is expanding. So and the freight rates are also at the peak, 13 years peak. So keeping that in mind, I think our local prices will be staying strong. No, and all these companies have reduced debt. Almost most of the steel companies together have repaid debt of 40,000 crores or 46,000 crores. So that means they are generating cash, and using accruals they are expanding. So I think the long-term prospect of steel companies are good. But correction after a massive rally, a correction is a welcome correction. So maybe another 3-4 months of weakness can be there, but for a long-term investor, I think these companies add a lot of value. And JSW Steel has got a mine where almost if that the deal goes through, 80% of their needs will be taken care of. So there are many positives in metals. So we should take it positively, but correction is something which will happen, and we need to be prepared for it.
This one is from Ravi Chandran from UAE, and he's saying that he's purchased Hindustan Media Ventures 1,000 shares at 83 rupees per share. He wants to know whether he should hold on for the longer term for a target of 130 rupees per share. What say, Kunal? Makes sense for Ravi Chandran to stay put with Hindustan Media Ventures with a target of 130 in sight for it by any chance?
Well, I would suggest to try and book out profits over here and look to switch to some large cap names. I think these are market times where you should not be very, very adventurous with your trades and with your positions and your portfolios. I think it makes prudent sense, and to try and shift to a stable large cap name. There are plethora of opportunities which the markets are showing at current levels, fresh candidates or breakouts, the earlier ones which are breaking out again. So you can try and pick and choose from a mix of stocks, some of the names which I've already mentioned at the start of the show as well. So I would suggest to book out profits over here and shift to some other quality large cap name.
All right, so that's the take coming in on Hindustan Media Ventures. That's what Kunal has to say. But time for our rapid fire segment now, and let me kickstart with it. This one is from Pradeep from Abu Dhabi. He's saying he has 100 shares of Emphasis, which he's bought at 973 rupees per share. Should I book profits or hold on to it? What's your take, Kunal? Emphasis? Kunal, would you want to take this one on emphasis? Should Pradeep go ahead and book profits?
No, I think you should definitely look to hold on. I'm very bullish on the IT pack from a long-term basis. You should definitely look to hold on to it.
Okay, Sapna wants to know about Tata LIC. We've got Sapna who's holding on at levels of 1,650. What level can she see by around December is the question. Kunal, do you want to take that?
It's very difficult to predict very short-term kind of aspects, and specifically from a stock which has done pretty well, but very bullish on Tata LIC as well. And if I can take a guess as such, then I believe by December the stock should be at least the 6,500 to 7,000 plus level.
Okay, this one is coming from Kaushik from Gurgaon, saying that any view on Udaipur Cement, should I stay put with it or should I go ahead and sell? What's your take on Udaipur Cement, Mr. Prabhakar?
Exit.
Okay, we've got Sagar who's asking about the aviation space, and I believe we've already gotten into this. Would you like to repeat, just for the sake of our viewers on this segment, Mr. Prabhakar, what is your buy?
Indigo. Indigo is the best buy in aviation, being the market leader.
Alright, so this one is coming in from Gokul from Kerala. He's saying, can I enter Bank of India now for the period of 1 year? What's your take, Kunal? Bank of India makes sense for Gokul to enter right now?
Well, I would suggest no, and in fact, I would give a replacement stock for that. Could be either Bank of Baroda or Canara Bank. They are much better, mid-cap PSU banks as compared to Bank of India.
One last, Indiabulls Housing bought at levels of 240. Would you hold on to this, Mr. Prabhakar?
Housing finance, they are facing some trouble. So I will be with banks. So State Bank of India is a better housing finance company with more than 25% portfolio.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you, Mr. Prabhakaran, as well as Kunal for joining us on the show, giving us a take on the aviation sector as well as resolving all the viewer queries. We've got a lot of messages coming in from our viewers actually thanking the experts for their opinion on the stock, making it easier for them or helping them actually go ahead with their stock decision. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, lots lined up for you after the break, so don't go anywhere.